What's going on, guys? This is Moon Capital coming to you with the second ever Moon Capital podcast. I wanted to make this quick podcast basically explaining the basics of Bitcoin and then going through the most common refutations against why you shouldn't buy it or why it is a bad idea to hold some for the long term. And so, quickly starting off, I kind of wanted to talk about exactly what money is. So, a lot of people, we go through life and school and work, and we make a living earning something we call money. And most of us that do this don't actually think or wonder, like, why am I earning this money? Like, what gives this money value, and why is it useful to me? Why can I trade it at different stores for different products or services? And I think it's really important before you get an understanding of Bitcoin to get an understanding of what exactly money is and maybe why uh, it is valuable and like what gives it value to begin with. And so I think it's very important to think of money as a good. So in common economics, you think of a good as a physical item that has certain properties. And so, for example, Bitcoin itself is a good. And also, a bed is a good, a chair is a good, a toothbrush is a good. Now, certain properties make some goods better than other goods for specific use cases. So, for example, a toothbrush um, needs to have like an appropriate size. It has to have a secure handle and it has to have soft bristles if you plan on using it to brush your teeth. Now, certain goods like toothbrushes are well suited for brushing teeth, and some goods are well suited for being used as money. Now, goods that are well suited to be used as money have certain properties, like the toothbrush had certain properties that made it useful for brushing your teeth. Some goods have certain properties that make it useful to be used as money. And so these properties, unlike a toothbrush, include durability, divisibility, transactability, fungibility, portability, and scarcity. So when looking at certain goods like the dollar, gold, and Bitcoin, they typically check all of those boxes, at least to some extent. They're not all perfectly durable, they're not all perfectly divisible, they're not all perfectly scarce. But they do check those boxes enough to be some of the best goods in the universe capable to be used as money. And so, one of the most interesting properties of money or of a good that is well suited to be money is scarcity. And of those properties that I've mentioned, Bitcoin definitely checks those first five properties. And now it is currently proving its scarcity over time as it gets more decentralized, as it gets more valuable, as its network effects continue to grow. Bitcoin proves its scarcity and then proves to the world that it is the actual most scarce good in the universe that also happens to be durable, divisible, transactable, fungible, and portable. So I just quickly wanted to explain why Bitcoin is a good that can be used as money. And now I'm going to quickly go through some of the common refutations or arguments that you might hear against Bitcoin. Typically, in my opinion, these are arguments that can be found in traditional finance or anyone that's maybe looked into Bitcoin for a week or two, had the coming bias coming into their research that it was not something that you should invest in or should hold over a long period of time. And they kind of came to the conclusion before completing their research that Bitcoin was going to be not a great investment. And so these are the common things that they would say to you to prevent you from possibly buying and holding some Bitcoin. And I'm going to quickly explain why that doesn't really make much sense. And if they had just done a little bit more research, they would have quickly found out that, okay, that maybe I was misguided. And so the first one that is very common is that altcoins or forks are inflationary to Bitcoin. And so, like I said, one of the properties that makes money valuable, makes a certain good scarce, is that it is scarce. And if altcoins and forks make Bitcoin not scarce, meaning they are to some extent inflationary, then that kind of defeats Bitcoin's scarcity property, which most would say that is its most valuable property, provable scarcity. But my argument against that would be it's kind of like saying as Venezuela prints more bolivars, that devalues US dollars. Now, both are forms of paper currency ran by a central bank and printed by the government's treasury. However, they're clearly two different things. It's kind of like there's a reason that Bitcoin Cash trades at a different price from Bitcoin. If you wanted Bitcoin Cash, you could buy it for $200 right now. If you wanted a Bitcoin, you're gonna have to pay $11,500 for it. And so they are clearly two different things, and they're two different things because they're two different goods. They're two different software that you would be running. There's different network effects surrounding the coins, and it's different holders for each of the coins. It's also kind of like saying that as more silver gets mined, it devalues gold. Those are two different elements. They have two different atomic numbers on the periodic table. They may be metals. They may be hard metals. They both may be capable of being extracted out of the ground, but they're still two different things. Another example might be Facebook and MySpace. Just because you have a MySpace account doesn't mean you have a Facebook account. And just because you invest in MySpace doesn't mean you have shares of Facebook. They're two different things that might be similar, but they're different. And another thing that's extremely important to understand about specifically monies and the scarcity of them is that there's network effects around them. And so just because there's another cryptocurrency, anyone can go out and create a cryptocurrency. Like I can go out, copy Bitcoin's code right now and create Moon Capital Coin. That doesn't mean anyone is going to go mine Moon Capital Coin. Doesn't mean anyone's going to go pay $11,500 for Moon Capital Coin. In fact, there's probably going to be no bids for Moon Capital Coin. It's probably going to be worthless. So these coins clearly are completely different entities, and that is what makes Bitcoin scarce, because it cannot be copied. The network effects cannot be copied. The miners that are supporting the network, the developers that are supporting the network, and the companies that are supporting the network, and the holders, more importantly, the holders that are supporting the network, that cannot be copied. All right, so the next common one is, what if an altcoin is created that is better than Bitcoin? So first, I would explain that we kind of talked about how scarcity is Bitcoin's most valuable property, and the decentralization of Bitcoin and its network effects are what makes Bitcoin scarcity most prevalent and very powerful, to where no other coin can compete with that. And so what I would say, if an altcoin is better than Bitcoin, I would first explain that you can't beat Bitcoin's monetary policy. I mean, it's already perfect scarcity. There's only 21 million. You can't create a coin that decreases in scarcity without extracting wealth from the holders of the coin. So perfect scarcity is as perfect as you can get. Now, the second point I would like to make is that, even if some breakthrough technology, maybe faster transactions or more privacy, if something came out that was vastly superior than Bitcoin, it would be incorporated into Bitcoin. Considering Bitcoin is open source software, if new code comes out that improves Bitcoin's privacy or improves Bitcoin's scalability, it will be incorporated into Bitcoin as long as it's safe and proven to work. All right, the next one is Bitcoin is a Ponzi scheme. So this one requires, I would say, pretty interesting. Like you have to think about this one for a while. And when I first got into Bitcoin, the idea of Bitcoin being a Ponzi scheme or Bitcoin being a bubble, that was probably my biggest refutation of the idea of Bitcoin. Because I was like, well, it is true that, if I'm buying a Bitcoin and I eventually want to trade it for something else, it all depends on what someone else is willing to pay for a Bitcoin or willing to trade for a Bitcoin. And then I had the idea that all monies, whether it's gold, US dollars, Bolivar, are Ponzi schemes or bubbles. Your dollar really only has value because other people are willing to accept it. And so Bitcoin, has also been criticized as kind of a Ponzi scheme because of the way it benefits early adopters. However, although it is true that Ponzi schemes benefit early adopters, not everything which benefits early adopters is a Ponzi scheme. The difference between Bitcoin and a Ponzi scheme is that in a Ponzi scheme, the early adopters benefit by cashing out. With Bitcoin, there's no reason to ever cash out. Now, as long as the dollar still exists, then Bitcoin has prospects for further growth. Once Bitcoin reaches the point where it can grow no more, there will be no cash left to cash out into. It is better to say, not right now, that Bitcoin holders have already cashed out and they've cashed out at the dollar, something that can be easily inflated. And so going off of the Ponzi scheme idea, some people say Bitcoin is a bubble. Now, a bubble bursts because eventually people have to get around to using a good for its ultimate purpose. Money, however, does not need an ultimate use. It may only ever be passed around from person to person without ever being consumed. Now, a stock is valued by the sum of its interest-adjusted dividends. A bond is valued by its redemption value adjusted by the interest rate and the risk of default. Now, a commodity is valued by the value of the goods it can be used to produce. However, for a money, there's no independent quantity to provide a reality check. All money is like a bubble that never bursts. So another one that a lot of people tend to say is Bitcoin is too volatile. Now, some people may say Bitcoin is too volatile to be used as money, whereas I tend to have the opposite opinion. Bitcoin's boom and bust cycles are actually a feature and speed up the adoption process. In my opinion, the massive bull markets that we've had over and over again, 2017 was not a unique time in Bitcoin's history. We've had previous bull runs that have caused many people to get into Bitcoin. And I would say when Bitcoin goes through these bull runs, it gives strength to its 7 network effects. Number one, I would say, is speculation, where people see the number go up, they see the number go up technology, and everyone wants to make money. And if Bitcoin keeps going up and you buy some, well, your wealth just increased. So number one is speculation. Number two is merchant adoption. As more and more businesses accept Bitcoin, that's good for Bitcoin. Number three is consumer adoption. as more and more consumers buy into Bitcoin, hold it, trade it, that's good for Bitcoin. Number 4 is security. As more and more miners join the network, that makes the Bitcoin network more secure and securing your transactions and securing final settlement for any transactions that you're doing on the network. Number 5 is development. As Bitcoin grows, more developers, more businesses come in and work on trying to develop the code and improve it. And number 6 is financialization. This is, derivatives being built off of it, exchanges being built off. This is the CBOE and CME coming in and offering futures on Bitcoin. This is Bakkt, which is ICE, who owns the New York Stock Exchange, coming in and allowing institutional traders to buy Bitcoin. And then number 7, the last network effect, is world reserve currency status. When more and more people use a certain money, it makes that money more valuable. Again, network effects are very important when it comes to money. And so eventually, after these bull runs come in, the price kind of gets a little too far ahead of current adoption. And once the tide turns, the price might begin to temporarily fall. As we've seen multiple times, Bitcoin has some pretty severe bear markets. Now, when the price starts to fall, many people sell. Many people that maybe got in for speculation may not understand why Bitcoin is valuable. They might sell, and eventually the only people left holding Bitcoin or buying Bitcoin are the people that really understand why it's valuable to begin with and have confidence that it is the best money, the best good to be used as money, and over time, in the long run, it will continue to be adopted. So now the price continues to go down until, again, the last people in the market buying and holding are the people that really understand it. This causes the supply to dry up around a really low price. And after the 2017 bull run, this was around $3,000 when it crashed and stuck around 2018, 2019. Now, once the supply starts to dry up, there's simply a lack of sellers, and the price begins to creep back up, which restarts the cycle again, drives in more speculation, and the 7 network effects really begin to ramp up again. The next one is that governments will ban Bitcoin. This is an interesting idea, and I think it's kind of misguided. I think a lot of people that go out and say this are to some extent admitting the fact that Bitcoin is superior money. It is a threat to gold. It is a threat to the yen. It is a threat to the euro, and it is a threat to the dollar. And you're admitting that Bitcoin is superior money. And so you're saying that the governments will ban it to prevent this will happen. So if you're already at this point, this is one of your last lines of defense as a no coiner or someone that doesn't hold Bitcoin. But I'll refute it as best as I can. And so, like I said, by the time that Bitcoin is a threat to these governments, in my opinion, it'll be traded much higher price. There will be a lot more businesses, a lot more governments, a lot more people involved that own Bitcoin and have skin in the game to fight against the ban. And I think this is really important to understand that. I don't know if you're involved around Bitcoin Twitter, you know that there are people that are really passionate about Bitcoin, like crazy passionate, and there are very, very, very few people that are unpassionate about Bitcoin. In fact, there are very few people that spend days and days and days and years trying to argue against Bitcoiners. There's maybe like 3 of them, and so there's really no reason to be against Bitcoin. You don't have any skin in the game if you're against Bitcoin, and It just doesn't make much sense. But we'll entertain the idea. So, in my opinion, you can't ban Bitcoin. To some extent, it would be like banning alcohol, except even more difficult because it doesn't physically exist. Like we had prohibition in the United States. That didn't even work for a very physical item. Um, Bitcoin literally is not physical. It can be transferred anywhere in the world in the matter of a few seconds. It can be settled uh, on chain in 10 minutes. And it can be sent, from the United States to Europe, to Africa, to Australia. So it would be very difficult to ban something that doesn't physically exist. Now, all 195 countries in the world, they're not going to simultaneously ban Bitcoin, especially once it's reached extremely valuable levels. And the countries that don't will become far more prosperous over the long run due to Bitcoin, allowing the free market to set interest rates instead of centralized institutions like the Fed or other central banks around the world. The next one is that this just seems too much of a stretch. Like why is everyone going to shift to Bitcoin if the dollar works fine today? And my argument to this would be that everyone that owns Bitcoin has an incentive to spread Bitcoin and convince other people that they should hold Bitcoin. For the dollar, no one benefits by hoarding dollars. Dollars are only benefit the people creating them. So people will act out of their own self-interest to increase their personal wealth. If Bitcoin actually is the hardest money ever created, meaning it's the scarcest asset ever created, and also happens to have the perfect properties of money, like we talked about at the very beginning, individuals in the world will choose to retain their wealth rather than lose it. It's a very simple concept. More interestingly, though, people that people don't have to realize that Bitcoin is the most scarce monetary asset ever created. They don't have to understand how it works. They don't have to understand the code. They just have to see that throughout history, civilizations and individuals who put their wealth in anything other than gold didn't really store their wealth for long. Wealth ended up in gold through the inflation of its competitors without anyone needing to understand anything about monetary policy. So economic reality is fate, whether you understand it or not. If Bitcoin is the hardest money, its number go up technology will be far successful than anything we've ever seen before, and that'll be enough to convince people that this is economic reality. You're either joining us or you're going to get left behind. All right. The next one is Bitcoin is deflationary, and this is bad. So this will come from a lot of people that studied it, maybe economics or they're big Fed people, and they believe that you need inflation to help grow the economy. Otherwise, everyone will just hoard, 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 and never get anywhere, and the economy won't grow, and we'll all just hoard our Bitcoin and never spend it. And so many people criticize Bitcoin because of its fixed supply. However, this fixed supply is the exact reason why holders of Bitcoin have an incentive to stick around and win the fight. Without this fixed supply, it would not provide the same potential benefits to early adopters, and therefore would have a less likely outcome of success. Now, whether deflation is good or bad for society, it is individually beneficial, and therefore the fixed supply is a crucial part of Bitcoin's success. And so, like I said, in my opinion, deflation will actually be fantastic for society. The idea that it will be bad is very misguided, but at the end of the day, it doesn't matter. Bitcoin individuals choose what's best for themselves. They don't choose what's best for society. And if you want to keep holding your dollars and losing wealth, you have the right to do that. But some people are going to opt to hold their Bitcoin, and that is going to continue to grow their wealth, or at least retain their wealth as best as possible. And most people are going to look out for themselves. They're not going to be hoarding their dollars to try to grow the economy. Next one is Bitcoin is used for criminals. So yes, there is a dark web. Yes, many people use Bitcoin as payment on the dark web, but you have to realize that all transactions in Bitcoin are recorded on a public ledger, meaning everything that you send on Bitcoin, any transactions that you make to a drug dealer, any transaction that you make on the dark web using Bitcoin can be traced. Cash today is more untraceable, and it's a large majority of illegal transactions in the United States and the world take place in cash. Money laundering is another one. About $2 trillion a year is laundered globally, and Americans spend $100 billion on drugs annually, and Bitcoin is currently worth $200 billion. So cryptocurrency is a very, very small part of global money laundering currently. In fact, most of it, like I said, is done through cash. All right, the next one that some people will say is Bitcoin is a fad. So this is an interesting idea, but I think through time this will obviously be proven wrong, and I think it's already been proven wrong. So Bitcoin has survived Mt. Gox, which was a popular exchange being hacked. It's survived the Silk Road closing, which was a popular dark web marketplace. It survived the China ban. It survived the Civil War. And it survived the blockchain, not Bitcoin nonsense that went on in 2016 and 2017. There's been attacks from mainstream press, Wall Street, economists, and yet its price is still at pretty much all-time highs. This is currently, I think it may have been like 90 straight days that we've been over $10,000 per Bitcoin, which is the longest period we've ever been over $10,000. And so the network is stronger than ever, and it's just kind of hard to see that if Bitcoin is a fad, it's kind of going in the wrong direction. We're still in the upward swing of the fad. And one thing that is interesting is that, at the very beginning, Bitcoin kind of bubbled up to 30 cents. It crashed to 3 cents. It bubbled up to $30 after that, and then crashed to $2. After that, it bubbled up to $259, and then it crashed to $45. After that, it bubbled up to $1,100, then crashed to $150. And more recently, we bubbled up to almost $20,000 and crashed to $3,000. And so if Bitcoin is a fad, why did it not die at 3 cents, $2, $45, $152, $3,000? Bitcoin just seems to not die. And I think if you're going to call Bitcoin a fad, you really need a great explanation of why it hasn't already died. And I think that just doesn't make too much sense. Another thing that people say is Bitcoin has no intrinsic value. And this is a very kind of a deep argument. And personally, I would say nothing has intrinsic value. All value is subjective. I mean, by definition, value is in the eye of whoever is valuing a certain good or service. And so to ascribe value to a certain good or service, you need a person doing that or a group of people. And so nothing has intrinsic value. It's all value subjective. And again, it comes down to certain goods are better goods to be used for money. And we choose those goods based off their properties. And Bitcoin has the best properties. Another thing is the complexity of Bitcoin. It's very complex. No one will ever understand the code behind it. And I think this is a pretty bad argument. Like most people don't understand the internet. They don't understand TCP/IP. They don't know how to code. yet they use Google, Facebook, Amazon every day. You don't have to understand the inner workings behind Bitcoin. You don't have to understand what the Lightning Network is. It won't be that complicated. That is. Here's another very last one that I want to talk about is the energy consumption. This comes from a lot of people that recognize that Bitcoin is very energy intensive, meaning it uses a ton of energy, more than certain countries around the world, are some of the common quotes. And I kind of have a good passage that I want to talk about for this one. So, all things in our lives are closely linked to the price of energy. Purifying water requires energy. Transporting products requires energy. Manufacturing products requires energy. Cooking requires energy. Refrigerators and freezers require energy. And in a free market, the cost of any good largely reflects the energy used to produce that good. Because free markets encourage the lowest price goods, the energy used in producing any good is minimized. Money, which is the representation of the work required to generate goods and services, can also be viewed as stored energy. And so this is a very interesting point. In the early 20th century, there were industry leaders like Henry Ford and Thomas Edison. They were interested in replacing gold and the dollar with something called the energy dollar, or units of energy. And now, this concept was actually pretty popular due to its sound money characteristics, including a well defined unit of account, easy measurement that is not easily counterfeited, divisibility into smaller units, and fungibility, meaning these units would be equivalent to every other unit. However, energy money was kind of flawed. At the time, the idea it could not be easily transmitted or stored. And so it was really fascinating reading this article that came out in the early 20th century, because what Thomas Edison and Henry Ford were describing was Bitcoin. Bitcoin is it is an encrypted arc of all the world's energy that will be floating above all of the other non-relevant and monies that cannot function properly, that do not store your value perfectly. So really, Bitcoin is a super commodity. It's minted from energy, which is the fundamental commodity of the universe. And the proof of work algorithm behind Bitcoin literally transmutes energy into digital gold, Bitcoin. And so that is, the argument behind why Bitcoin is the best good to be used as money. I hope I answered the most common reasons as to why you should not hold Bitcoin. And I hope you understand why that you should hold Bitcoin. And I hope you do, because I think it will probably change your life.